Hello, traders, and welcome back to Explain the Charts. Today, we're diving deep into the NZDUSD, or the New Zealand dollar against the US dollar pair. The Kiwi has been on a downward trajectory recently, with the unexpected 50 basis point rate cut from the Reserve Bank of New Zealand sending the currency to a 7-week low. This move has been fueled by concerns over the New Zealand economy, with the ANZ Morgan Consumer Confidence Index dropping to 91.2 in October, breaking a 3-month upward trend. On the other hand, the US dollar has been gaining strength, with investors expecting the Federal Reserve to keep interest rates higher for longer. This suggests that the NZDUSD may face further downward pressure in the short term. Let's take a look at the charts to gain a deeper understanding of the NZDUSD's current state and potential future movements. Looking at the daily chart, we can see that the NZDUSD has been trending downwards since the start of October. The pair broke through the 0.6000 support level, which previously acted as a key level of resistance. This is a significant development, as it suggests that the bears are in control and the NZDUSD could be headed for further declines. Let's zoom in on the 1-hour chart to see if we can spot any signs of a potential reversal. The 1-hour chart confirms the bearish trend we saw on the daily chart, with a series of lower lows and lower highs. However, we can see a slight bounce at the 0.5975 level, which could be a potential area of support. This area of support could provide an opportunity for short-term bulls to enter the market. However, it's important to note that the overall trend is still bearish. This means that the NZDUSD could very well break through this potential support level and continue its downward trajectory. Let's take a closer look at the 15-minute chart to see if we can find any clues about the short-term direction. The 15-minute chart shows a lot of choppy price action, with the NZDUSD bouncing back and forth within a narrow range. This suggests that there is a lot of indecision in the market, and it's difficult to say definitively which direction the NZDUSD will take. However, we can see a small bullish candle forming at the 0.5975 level, which could be an indication of a potential short-term reversal. But it's too early to tell if this is a genuine trend reversal or just a temporary bump in the road. Traders should keep a close eye on the 15-minute chart to see if this bullish candle can gain traction and lead to a sustained upward move. Let's go back to the 1-hour chart to see if we can spot any other important price levels. We can see that the NZDUSD has been trading within a range between the 0.6000 and 0.5975 levels in the past few hours. This suggests that the pair is consolidating before making a decisive move. Traders should pay attention to how the NZDUSD trades around these levels. A break above the 0.6000 level could signal a short-term bullish reversal, while a break below the 0.5975 level would confirm the bearish trend and likely lead to further declines. However, we can see a significant amount of volume on the 1-hour chart, suggesting that there's potential for volatility. Traders should be cautious and use appropriate risk management strategies. Let's shift to the daily chart to see if we can identify any key long-term levels. On the daily chart, we can see that the NZDUSD has been consolidating around the 0.5900 level for the past few days. This could be a potential area of support for the NZDUSD in the long term. However, if the NZDUSD breaks through this level, it could indicate a continuation of the bearish trend and possibly trigger a move towards the 0.5700 level. Looking back at the daily chart, we can see that the NZDUSD has been in a downward trend for several months, indicating the potential for long-term bearishness. However, the 1-hour chart suggests that the NZDUSD may be trying to find some support in the short term. It's important to note that short-term movements can sometimes go against the longer-term trend. Therefore, traders should keep a close eye on the NZDUSD's price action and be ready to adjust their trading strategy based on the changing market conditions. The next few days are going to be crucial for the NZDUSD. If the pair can break above the 0.6000 level, it could signal a short-term bullish reversal. However, if the NZDUSD breaks below the 0.5975 support level, it would confirm the bearish trend and likely lead to further declines. In the long term, the 0.5900 level could act as a key area of support. However, a break below this level could signal a continuation of the bearish trend and possibly trigger a move towards the 0.5700 level. Traders should pay attention to the NZDUSD's price action around these key levels and be prepared to adjust their trading strategies accordingly. It's also important to stay informed about any upcoming economic releases or news events that could impact the NZDUSD. For example, the Michigan Consumer Sentiment Index for October is due out next week, which could impact the US dollar's strength and consequently the NZDUSD's direction. Remember, trading is always a high-risk activity. Always do your own research, manage your risks carefully, and never invest more than you can afford to lose. And as always, thanks for watching Explain the Charts. Don't forget to like, subscribe, and hit that notification bell so you don't miss out on future analysis.